All right, Radhika, we're live. Thanks for joining me this afternoon. And as I typically like to do, I'll give you the floor. Seeing you're the guest today, why don't you go ahead and introduce yourself to my audience?
Well, thank you so much, and thank you for the invitation. So, I'm Radhika Lipton. I'm the founder and CEO of RADD LLC. We are a compliance and internal audit consulting firm for financial services. And I put financial services as a broad statement because we help banks, credit unions, mortgage companies, fintechs, anything that services the consumer finance um, availabilities or consumer finance product lines.
Yeah, can we maybe back up a bit too? I like to do this with my guests. Where did your career start? And maybe you can keep it high level. How did you go from graduating college or whatever your path was into consumer finance, risk, and compliance?
A very interesting journey. I graduated college a long time ago, have been in financial services for well over 30 years. But I had a degree in marketing from Cal State University, Fullerton, and I was so excited to be able to provide marketing services to consumers and based on consumer behavior. When I first entered the market, I had debt and I had a car, and the first job that I was offered, or any job for that matter, was an annual salary of 12,000. And I thought, there's no way I'm going to survive making $12,000 a year when I graduated back in 1987. So I had friends in the family that were branch managers at Wells Fargo, and they told me, well, we have a career fair. Why don't you come and look at our career fair and see if that's something that you would enjoy? So I went through the process, interviewed in the career fair as well as individual branch managers, and was hired on at double the rate at 24,000, which I thought was fantastic back then, to be what is called a personal banker. So basically, someone, when you walk into a branch, someone that is sitting there helping you open accounts, helping you address any issues, not the teller line, but on the sales side. So I actually started my career on the sales side at Wells Fargo. I never left banking since then. I stayed in the sales side. I became a premier banker, which handled only the affluent clients. Then I moved on to becoming a branch manager and then eventually a district manager. So my path stayed with Wells Fargo for many, many years. And then I was approached by another major multi-trillion dollar organization to join as their Orange County. I live in Southern California, by the way, so anyone that's listening will know what Orange County means. But I was hired to be the Orange County sales manager. And I took the job. The first day on the job was a company wide meeting in New York. At that company wide meeting in New York, they said, by the way, we've eliminated the 8 positions in the country that are sales managers. And I thought to myself, well, wait a minute, this is my first day on the job. They said, we're going to replace it by if you can become district managers of operation. Now, for anyone that's in the sales capacity, that is a huge leap. That is a big jump, even though I will say my training at Wells Fargo was pretty extensive in that they did cross train us to understand operations. But when you have a sales mindset, you don't want to go to operations and compliance and risk management. But, had a house, a mortgage, kids, and I thought, well, I'm going to have to do this. So I was forced essentially into the role, but so glad I did because I know that people say you went to the dark side or whatever side it is. It's been the most rewarding side that I've ever been on. I'm not held to a what have you done for me lately mentality. I don't have goals as such, production goals and things like that. So I really enjoyed it. And there was a lot to undertake at that time in terms of fixing the operational integrity of the region that I had. As a result of that, and the good work that we did as a team, I was tapped on the shoulder. By the way, this is Citibank. And then I was tapped by Citigroup, the parent company, to take over all of auditing of branch operations for Citigroup, which meant well over 335 branches throughout the country. And that started my journey into the audit side of the business. Again, not something I was, and I will say that most of my career has been not me applying for jobs, but me being tapped on the shoulder saying, why don't you try
Mm.
this? from incredible mentors that have come along the way that believed in me, believed that they saw the ambition in me, and I was a consummate student. I always wanted to learn. So I think that resonated with them, and I was given these opportunities. I then became director of internal audit for Citigroup and director for retail distribution. And what that means is that anything that touched the consumer, so Citibank, Citi Mortgage, Citi Financial, any one of those arms were under my purview. And I had a team of 12 auditors based out of California. 2007 hit, and the first of the financial crisis, and Citigroup was the first to enter the I guess job elimination phase, as many of the financial institutions did thereafter. Many you saw failed as well. So they shut down California operations, moved everybody to Irving who wanted to move to Texas. I personally didn't. As I said, I was born and raised in Southern California, anchored here, love it here, didn't want to move to Texas. Nothing wrong with Texas, I just didn't want to move. And a week later, after I was released and was given my severance, I was picked up by a headhunter to start a bank. And that is a whole different animal, in that basically everything that I had learned up to that point came together, but you also started with a blank slate. There was no policy written, no procedures written, no technology, nothing. It was a concept on paper of let's start a bank. So that was my first entry into doing everything. I did compliance, I did IT, I managed Bank Secrecy Act, I managed vendors. I mean, everything that the CEO or the chief financial officer didn't do, they're like, let's give it to Radhika and her department, they'll take care of it. So started off as 3 employees, worked on it, from determining the tech stack to determining the compliance infrastructure and everything in between. That's what really got me exposed into heavy compliance work. And since then, I've stayed in the community space in community banking and served in the roles of chief compliance, chief risk, head of Bank Secrecy Act, things like that. So I stayed in that area. I've always loved that area. I love risk management. As you know, banking is generally a very risk adverse industry as a whole. So there's always opportunity. Everybody needs this position and this role. I always considered myself a W-2 kind of person. I was never the risk taker either. I didn't want to be worried if I was going to be able to make my kids' tuition or pay the bills. I was never that kind of risk taker. I always wanted to have that guarantee of the salary. But as my career progressed, there was times where I worked at some banks that I didn't care of the philosophy of the bank or how they were operating the bank. And I was talking to one of my mentors. I have several former CEOs that were my mentors, and one of them even said, "You're the best compliance officer I've ever had. Why don't you start your own company? I'll give you business. You can be my part-time compliance officer." And that's how it started. So I started off just doing compliance consulting for 2 banks. Both of them were my former CEOs that I worked with. Worked at one in the morning and worked in one in the afternoon, just doing the work that I love doing so much, but yet under my company name and not as an employee. From that, fast forward 6.5 years, we have over 15 people. It ebbs and flows. Sometimes we have more depending on what the client needs are. We have several people that are on a consultative basis versus I have half my team is W-2, half of it is consultants because of their expertise. So if I get a request from a bank or a credit union that is a very niche expertise that they need, I will lean on someone with that certification for assistance. So at any time, we could have up to 20 people on a project. Mm-hmm. And we've grown RADD from just being a compliance consulting firm because during COVID in 2020, a lot of the compliance dollars started to freeze up because people were so busy. Financial institutions were busy just trying to move people around, protect people, get laptops, get them to be remote, right? Just changing everything that they used to do and how they used to operate, So their focus really wasn't on, who do we hire for compliance at the moment? So what I did is I knew that every institution still needed internal audit. I was the director of internal audit for Citigroup, so I thought that's a natural thing to add. It was something that was very easy for me to complement the current offering.
Mhm.
So we have two divisions of our company now. We have our consulting and we have our internal audit division. And each one has different set of skill sets. So we have different teams covering those two different areas. But 50% of my revenue now is internal audit and 50% is consulting. Audit is a lot more consistent income versus compliance consulting is a gig-based, project, right? It's usually one and done. And then, hopefully when something else comes around to that institution that they need help, they'll call us. So that's
Got
how
it.
my journey started from being a salesperson to running a company, a compliance company.
No, that gives a lot of context for me, and I kind of want to back all the way up to the beginning because I found something interesting that you mentioned. Is you basically, and correct me if I'm wrong, a friend said, "Hey, why don't you come work for Wells Fargo? Why don't you come into banking?" Um, and before we started recording, I let you know that I work in the health insurance space, and it was a similar story with my career where I had a family friend that said, "Hey, why don't you work for, you probably know, Kaiser Permanente? Why don't you come on board and take a sales role with Kaiser?" So I guess my question is, there's this sentiment sometimes, or as you're growing up or as you're graduating from college, you need to follow your passion or you need to find something you're passionate about. But it seems like you just kind of fell into this banking career and ran with it. I mean, would you say that's fair? Or what would you say to people that they're trying to find their passion? Um, and for you, you've kind of found banking and you ran with it and now you're very successful with it, but I don't know if you're passionate about it. So I don't, if you have any comments on that kind of sentiment.
So obviously at that time, passion was superseded by need, right?
Hmm.
So I needed to pay bills, and so I at that time I couldn't pursue my passion, but I am extremely passionate about what I do now. So my advice to people, and actually, to be honest with you, this sort of happened to my daughter as well. She graduated George Washington University, a phenomenal university, with a degree in international affairs. And I really thought she was going to take the line of politics and advising. She did a lot of grassroots work in DC, but she also graduated at the worst financial times where it was poor economic times. And she also then she fell into marketing, got a marketing job at a bank that I knew. I got her in, and she interviewed and got the job to be a head of marketing. She is the most phenomenal marketing professional I've ever seen. She's actually works for a very big global company now and is head of one of their marketing divisions. For the sake of privacy, I'm not going to name it, but
Hmm.
she's exceptional and she's extremely passionate. So I guess my advice would be, obviously we have our passions and our desires, but sometimes it does get superseded by need, right? Or, a lifestyle requirement. But don't um, don't close the door on opportunity. Take a look at it because you never know where it may lead, especially if you end up joining a conglomerate or a worldwide organization. You could end up back in what you enjoyed within that company. Just get your foot in the door, educate yourself, learn what that company is offering, and then maybe you can then marry both marry the need and the passion together, as I have done in
Hmm.
banking.
Yeah, and I'm curious. You said that your passion for compliance or banking has kind of grown as you've continued through your career. Can you maybe expand on the why of that or how that occurred? Right. I mean, on the surface, for maybe someone younger watching it, they just think, "Wow, banking and compliance. It sounds very dry." So, how did you do that, or what about it specifically allows you to be so passionate and involved in it today?
Indeed, it's dry, but as I said in my background, I was a consummate student and I love learning. And if there's anything that keeps us on our toes is the constant change in the regulatory environment, driven by poor actions of people on Wall Street or anywhere else, right? I mean, we've seen it. For anyone that's been been doing this as long as I have seen all the cyclical um, effects of financial institution regulation. It also is dependent on who's in the White House. The Democrats feel one way, the Republicans feel another way. So it's never dull from that perspective, right? So it's similar to anyone that's a lawyer. The law is the law, but how the law is interpreted, how the judges interpret it, is always a guessing game. We have regulation in financial institutions, but how it's interpreted, how the regulators interpret it, changes. You've probably witnessed some of the some of the fines that have been imposed to some of the bigger institutions that didn't keep the consumer's protection in mind. Well, born from a lot of the financial debacle of 2017 was the new, CFPB, right? The Consumer Financial Protection Bureau, to protect the rights of consumers. So legislation is constantly coming out, which keeps me entertained, if you will. I mean, I get to continue to learn and help my clients make sure that they don't become subject to penalties and fines. There's nothing more satisfying to get that call saying, thank you so much for updating my policy, because you did, because you found this, or because you remediated this. I no longer have, subject to fines or criticism by my primary regulator. When you do get criticism by a regulator, that prevents a financial institution from growing, from expanding, from opening new branches. So it is such a critical need to have risk and compliance in the institution, I'm sure, as well as in insurance and medical and all of that. I mean, I think next to banking, only medical sits on top in terms of a regulatory framework, right? From
Yeah.
requirements. Banking is probably second. Financial, management is probably second. So to me, it's exciting because it's always new. Every day is always new, and it's always different. And because every financial institution has a different business plan, a different business model, their risks are different, their tolerance is different. You get to learn about a new financial institution and how, similar to what you're doing when you're talking about to founders and entrepreneurs. I like talking to CEOs of banks saying, why did you decide to become a CEO? Why are you in cannabis banking? Why are you in money service banking? Why are you only in commercial real estate? I love that part of it. I love to get to know what inspires people to get their bank or their credit union to grow.
Yeah, and I think a common theme I've found with interviewing different founders, entrepreneurs, whoever I'm interviewing, I mean, regardless of the industry, I think it all comes back down to connecting with people or helping people. You talked about consumer protection, right? And I think at the end of the day, a lot of the work you do uh, leads down to the consumer. And if you're a consumer and you put your life savings with whatever bank it is, you need faith that they're going to be good stewards of that, right? I mean, there's a lot
Absolutely.
of trust. There's a lot of trust we put into financial institutions. So I don't know if that resonates with you at all, or if you ever think to that level of the consumer or the whoever it is in Orange County, the family in Orange County that is using a bank, a credit union for whatever it is to create the life that they want and need for their family. Right. I don't know if that
Yeah,
resonates.
it's always top of mind for me. So we have expanded obviously our practice into fintechs, because which is financial technology. A lot of the companies that don't have the traditional brick and mortar, and quite frankly, most of them don't have a banking charter, so they're not regulated by some of the major agencies. But when they come to me to say, you know what, well, we want to do everything compliant. So we want policies and procedures. When I really walk them through, I make sure to point out that whatever they're offering, let's suppose they're offering a credit product and it's at 26%. I will make sure they understand that, that's way higher than even a credit card. This is considered predatory. It's not gonna serve you well. You at the end of the day, whether or not you have a banking charter or not, the Consumer Financial Protection Bureau does have jurisdiction, and if they feel like your practices are not in the best interest of a consumer, they will come at you. And so it's my job to educate the fintech to say, I understand what you're trying to accomplish, and I love that we are trying to deliver products and services to a whole new segment of people that don't go to banks, that don't walk into a financial institution, that want everything at their fingertips. But let's make sure that we're protecting them. right? So make sure that we have the right disclosures, make sure they understand how to read the disclosures, and make sure that, all our practices are safe and sound. So that is
Hmm.
always top of mind for me.
Yeah, and I think that that kind of resonates with the, like staying ahead of the technology and the new
Mhm.
things that are coming out, right? And this just popped into my head, so I'm just curious. You may not even deal with this at all, but 2021, even during the pandemic, over the last several years, there's kind of like a cryptocurrency craze, right? Where people are jumping into things that are unregulated that they don't know about. And I don't know if you followed the FTX scandal at all, or these, yeah, they're essentially acting as pseudo cryptocurrency banks. And, I think we know what happened, but they basically lost a lot of their investors and
Yep.
everyday people's money. But I don't know if you have any sense or any thoughts on that specifically, just maybe from a consumer perspective and cryptocurrencies in general, and how those companies that are kind of acting as financial institutions or exchanges should be regulated, because cryptocurrencies, they kind of just came out of nowhere, and it seems like regulators are struggling to keep up. So I don't know if you have any thoughts or what your perspective on that kind of stuff is.
Yeah, so my firm does not do any compliance as it relates to crypto at all. Um, but what I would say is, and I actually participated in a presentation on crypto compliance, I do believe they should be regulated because they don't have the protections. Like if you were to put your money at Wells Fargo, you're protected under FDIC insurance up to a specific dollar amount, right? So,
Hmm.
and F that protection. You could put 250,000 in your name alone. You could put 250 with you and a significant other. You could put 250 in a trust. All of that is then protected. Um, Crypto is not for the faint of heart, and you really have to understand. You understand what the risks are. If you lose that key, you're gone. I know somebody lost 30,000 because they lost the key. It's
Hmm.
gone. It's gone. In other areas of banking, similar to some of the more online payments like PayPal or Venmo. And if you notice, like if you have Venmo now, they have a disclaimer that comes up that you understand that once you press the send, the money's gone, right? It's gone. Whereas like at banks, like if you send a wire, you still may have an opportunity to recall as long as the person
Hmm.
who received it didn't already, take out the money. You have other protections available to you. So I would always just say to the consumer, obviously be well versed in what you're doing. There is a place for it, for those that are interested in hedging. There's a place for it. Those are our higher risk investors. There's a place for it. I will say in my stage in my career, in my life, it's not. But
Hmm.
I do believe it should be regulated. I believe that there should be some level of protection. And I believe that they should be held to the same standard that, financial institutions are held. The mortgage industry or the insurance industry, we all have regulation.
Yeah. One other thing this made me think of, or you mentioned Venmo, PayPal, Zelle, whatever it is, a lot of money these days trades hands very quickly and electronically. And I know that, I receive quite a few spam calls every day, or there's a lot more financial scams on the rise. Is that something you
Yes.
deal with at all, or advise institutions, or are banks? Is that top of mind for banks, and how are those things being addressed?
Yes. Obviously, fraud is the most critical area. Banks, the clients that I work with, and I see it all the time because obviously I have credit cards that are from Citi. Like if you have a Home Depot credit card, it's, the back end of it is Citi. They're constantly sending you reminders of how to protect your information, keep your password protected, use variations of passwords. Don't use the same thing on every single between your Citibank and your Wells Fargo and your Home Depot card. Don't use all the same passwords. There is some level of responsibility on the consumer to make sure, but the financial institutions also implement extensive fraud monitoring tools to protect when they see unusual activity. I will tell you, my debit card never works in Mexico for some reason, even though I've told the bank it's okay up to a certain dollar amount. But the fraud monitoring tools are so extensive to protect the consumer. Um, where we see the most fraud that the banks can't really help is when you get those phone calls, right? I'm the IRS. Even though the IRS clearly says it on their website, we will never call you, we will never do anything. When they get calls saying you're past due on your 2022 tax returns, you need to pay 5,000 right now, we'll take it by credit card. There's a lot of that. There's a lot with the elder population. I don't know if you've ever
Hmm.
heard of the grandparent fraud, where someone calls and says, I'm your grandson, I've got arrested, I don't want mom and dad to know, can you send me $5,000? And the grandparent gets very hysterical and does it. And
Hmm.
now, I don't know if you've seen it on TV, all the AI simulations. Someone can literally look like me, sound like me, and they've actually did even a 60-minute segment and falsify who I am and be able to. Those are things that financial institutions can't protect against. But all they can do is continue to educate the consumer, saying, be weary of phone calls, text messages. If you don't recognize the text message, you can always send it back to your bank saying, I got this text message. It requires 100% diligence on the individual to manage, right?
Yeah,
I,
I guess is there anything
I,
additional? Like, yeah, go
sorry,
ahead.
I didn't
Sorry.
mean to.
No,
I've
no, go
spoken
ahead.
to many senior citizen type, facilities on making sure they don't become victims, because our elder population does become victims a lot more than those of like you and me that are very self-aware, always online, always reading what's going on out there in the industry. So we do have to protect the consumers that aren't as well versed.
Yeah, and I guess is there any additional action that maybe someone with grandparents, older parents that, let's say someone's very old and unfortunately they don't have all their mental faculties right. And you mentioned the AI, it's just getting very sophisticated.
Hmm.
And I mean, is there anything else that can be done? Maybe not by the institution or anything that you recommend a consumer or maybe a son or daughter does for an older parent from a
Yeah,
protection perspective, right? I
yeah,
mean, if they don't, they think they're talking to you, they have access to the account, and there's no maybe like a two-factor authentication that maybe is someone has to sign
right.
off on a transaction. I mean, is that what they have to do, or what are the options?
Any and all of the above. They obviously have to maybe grant POA, power of attorney, to a daughter, a son, someone that can help them. They, if they belong to social groups, if they go to social events to keep themselves, busy, there's nothing wrong with having, banks even present, by the way, to senior citizen homes and things like that, different organizations. But the biggest thing is to find somebody that you can trust that can help you with this process. So I know that it's not just financial institutions. Even when I was recently at the hospital, and there was post about elder abuse, financial elder abuse, which is not just financial, but also physical elder abuse, right? So there is a lot of stuff out there. I think it's just, again, exploring everything that the elders have to, AARP does a really good job. So if they're members of AARP, they'll get that information. So just keeping their eyes and ears open. And the biggest thing is not fall, I know it's easy to say just don't fall prey, but if they're not informed to not fall prey of it, they may take
Hmm.
that call. And that's who those fraudsters count on, is out of 100 calls, they'll get one. You can't
Yeah.
prevent it.
Yeah, and I wonder if there's maybe, I think about it and all the spam calls I get on my iPhone, right? But then I see, oh, somebody's calling me from Wisconsin. I'm just not going to answer. I wonder, I don't know, is there more responsibility that should be placed on Apple, for example, that prevents some of those calls from going through? I don't know if you have it. You probably don't have any expertise on that, but that
I
seems
mean,
like it could be part of it as well. It's like, can you limit the spam that is just calling me or emailing me? Um, but
I have spam filters. There are solutions out there. Again, the seniors or anybody else would need to know of that, right? So I put those pieces on my parents' phones, to give you an example. So that, like a robo killer, that type of thing. where it automatically kills the spam. I obviously have their numbers on the FCC website on the do not call registry, but even it doesn't matter if you're on the do not call registry, they're still getting past it. I've trained my parents that if there's even a gap from the time you say hello, that is what is called an auto dialer. Hang up, just hang up. If
Mm.
it's to your point, if it's a number they don't recognize, don't even take the call. But I will tell you, my parents probably get 5 to 6 calls an hour, uh, spam calls.
And
And even getting
do they have a
filtered.
home phone? I'm curious, right? That's because my grandparents still have a home line.
Yeah, they do.
Yeah,
They
okay.
do.
Yeah.
Yeah.
So yeah, I think that's even worse. It's just ringing off the hook and you're like, "Oh, it's nobody
Yeah.
I want to talk to." It just keeps ringing, but yeah.
Yeah.
Anyways, it'll be interesting to see where that goes, right? And as you mentioned,
Right.
it's not going away.
Right.
One other topic I want to shift to is you mentioned it earlier, and I'm just curious about this and maybe what's changed in recent years is cannabis banking. And so
Mhm.
I know that, if you go back to 2017, 2018, and correct me if I'm wrong, but it was almost impossible for if you were a cannabis company and
Yeah.
you worked in Colorado where it was legal in the state of Colorado, but federally illegal, you had nowhere to put your money, right? So you're sitting on all this cash. And so what do you do from a banking perspective? And no bank wants to take on the cannabis client because it's illegal federally. Has that changed recently? Or what can banks do or cannabis companies do to safely transact and store their money?
Well, they can hire us
Okay.
to put
Yeah, perfect.
compliant program in place. So yes, obviously, as you've seen across the country, there's over 33, 34 states that have at least medically that it is legal. And, the recreational is a little bit less than that, but many states, such as California, have made it legal from a recreational perspective, understanding that federally it's still considered a, illegal substance. And so it's still federally not legal to offer it. So what we tell our clients, and more and more and more banks and credit unions have jumped in to offering the financial services because they want to be able to offer financial services to the community in which they serve, right? So um, it all depends on your regulator. Some regulators are far more strict about it versus others. I will say that I would say that the credit unions seem to have jumped into it a little bit better and stronger than banks have, um, almost to the point of 3 to 1. There's 3 credit unions that offer it to one bank that offers it. What I've seen from a regulatory perspective is the banks that do offer it have an absolutely rock solid compliance program behind it. They've gone through the right process. They've not just jumped into the fray. We've helped them build, for example, their policies and their procedures and their risk assessment, help them identify technology that will monitor those transactions. Because at the end of the day, what the regulators are concerned about is money laundering risk. That is the biggest area.
Mm.
So there's also multiple levels of cannabis. Now, I provide, for example, if I provide services such as site visits, am I an indirect relation to cannabis? Probably, it's possible. I wouldn't consider that because I actually do the work on behalf of the financial institution. But there are attorneys that support cannabis. There are manufacturers that make plastic, containers that support cannabis. They're all considered indirect. So the financial institutions still need to decide: do they want to do indirect or direct? Do they
Mm.
want to do a dispensary or a lab or a grower? And if they do, they need to have a rock solid program in place. So, is it feasible? Absolutely. I would not do it. I would never encourage a financial institution to get into that if they've had any criticism in any area of the bank by a regulator. So the regulator says your asset quality is bad, your compliance program is bad. You should make sure you're in 100% good graces with the regulator before entering a very high risk vertical. But
When you
if you have all the controls in place, you can do it.
when you say regulator, who is that specifically? Is that a state banking
It
regulator? Is it a federal
right.
entity, or does it just
So
depend?
when I say
Varies.
regulators, it could be CFPB, which I talked about earlier. It could be the
Mm.
FDIC. It could be the Federal Reserve. Could be the Office of Comptroller of Currency, the OCC. It could be the individual state regulators, per state. So it could be the NCUA, which is the Credit Union Association, right? Or any one of those kinds of regulators. Yeah, depends on their charter,
So,
how they're chartered.
and what's the biggest risk here? And I may be totally off base, but when I think of someone that is directly producing cannabis and then they're working with a financial institution. I mean, the way I think about it is it's legal in the state of California, but it's federally illegal. So that cannabis producer is putting themselves at risk from a theoretical raid from the DEA. And
Mhm.
then I'm curious, does that implicate the financial institution at all? Is that a talking point that comes up at all from a banking perspective, or is it more so the organizations that you just mentioned?
It certainly is, and it's absolutely incorporated in the risk assessment. The board of every financial institution needs to understand that because it is still illegal from a federal perspective, the regulators can come after you and assess even individual fines. So we make that very abundantly clear to the board that's approving the acceptance of cannabis deposits or cannabis dollars.
Hmm.
Um, so it's full disclosure. The board is fully aware. I think you talked about insurance. They also have to make sure the insurance company gives them the insurance to protect the board as well as the bank, as well as so. There was a while back that if you were a community bank and you processed through Wells Fargo as your correspondent bank, in your annual survey from Wells Fargo, they clearly asked you, do you do cannabis banking? Because Wells Fargo would have said we cannot provide correspondent services for you anymore. I don't think that's the case anymore. I haven't seen a survey be rejected as of late, but it could still happen. So, yeah, there is a waterfall effect with not getting insurance, or your other vendors will cancel you out, or things like that, right? That if the vendor's position is not to have clients that bank cannabis, they could push you out. You could lose a vendor as a financial institution. So I don't know if I answered your question, but
Yeah. Well, I think, I don't know, and I obviously don't know much about this at all, but I'm curious if there is kind of a general sentiment in your industry is of basically along the lines of if the federal government was going to crack down on this and go after dispensaries selling recreational cannabis in California, it would have happened by now. I mean, is that a sentiment at all, or could you not rest on your laurels like that, right? Because I want to say we're going on 6, 7+ years of state by state legalization.
right, right. Um, I don't think you can rest on laurels. I think that there's a lot more confidence from a board or a bank management or credit union management to take that risk. There's a lot more tolerance to take that risk. I think that the industry as a whole has done a really good job educating. So, you have to do your due diligence for every operator that you bring in. You have to make sure they have a compliant program. You have to test it. So I've gone into dispensaries. I have to make sure they take my ID, that they're looking at the age of the person, that there's security cameras everywhere. They have to follow the rules as designated by their licensee. So if they have a city license or a state license, they have to follow the rules of that jurisdiction. So we look at those rules, we do the site visit, and then we tell the bank if we've even had in one case where the operator did not let us in, and we're like, and even though we had the appointment and they knew that this site visit was critical for the bank to consider the account, they didn't let us in. So we let the bank know. The bank didn't let them open the account. So the banks are not willing to take risks with operators that don't have also a compliance program in place.
Yeah, I think that's a good point. That there are city state regulations to this as well. You need to make sure if you're a financial institution, you're playing with players that play by the rules, even if technically they aren't under federal law, but they are through their state or city laws and jurisdiction. So I think it's interesting. Yeah, it's interesting that it's a business opportunity, right? So I think financial
Yeah.
institutions are saying, I'm not going to turn down customers if like you said, that there's been a assessment of risk and it's deemed to be low risk, right?
Right. Right.
Um, one other question I have for you, because I'm kind of curious, just because you have a unique perspective on the banking sector. I know, and you hear a lot about this, news articles, YouTube videos, is just the amount of debt, household debt that the average American holds. And so I think debt can be used as a tool, but I know one thing that can really hurt people that are not financially responsible is credit card debt. And so that's not something I understand as a consumer. I know that the credit cards I hold, and I pay them off every month, so I'm not subject to this, but I know that they can have upwards 20, 28% interest rates. I'm curious if you could speak to any rules, regulations that limit how much interest banks and financial institutions can issue on consumer debt or credit cards. Because I mean, you get underwater of you have $30,000 of credit card debt paying 30% interest. I mean, it can really, it's a
Oh, yeah.
burden,
It could take
major burden.
20 years to pay it off.
Yeah.
So there is a variety of regulation, Credit Card Act and other regulations. The credit card companies perform underwriting based on your credit score, based on cash flow, based on a variety of factors. Every company does it a little bit differently, as well as consumer lending companies as well. But if you were to go out tomorrow and apply, so your credit bureau will show you a credit inquiry, right? And that ultimately affects your credit score. But let's say that you apply for 3 credit cards all on the same day. So the credit agency, the credit card companies are probably pulling your credit on the same exact day. So this is an example of a case where someone gets too much credit. Okay.
Hmm.
Managing credit is the second part of that story, but getting too much credit available based on your lifestyle and your income. And so when credit card company A doesn't see that credit card company B just pulled credit report because it hasn't hit yet. So it hasn't reduced the score yet. I could end up getting $20,000 line of credits at 3 different institutions, right?
Hmm.
In one day. Which I would have only been eligible for maybe one $20,000 credit card limit. Now I've got 60. And all the education in the world that financial institutions can provide about balancing your checkbook or credit card companies can provide cannot prevent a consumer from spending. The burden of that has to sit on the consumer. They have to
Hmm.
understand there's a lot of credit improvement agencies out there to help you get, if you're wanting to get past that, debt consolidation. But those companies exist because people don't know how to balance, right? I mean, I too pay off my credit cards every month. They just don't know. They just think, okay, well, I could buy it on credit and I've got 30 days, but then they don't have the money at the end of the 30 days. And then they have more credit that they've added on. It's up to the consumer. It's not up to any institution to control that.
Yeah, I agree. I think there needs to be personal responsibility, and you mentioned it. You can only provide so much education. I'm curious though, is there a limit to what a credit card company can charge, or do you have any insight into that rate setting process? Right, if I have a Chase Sapphire preferred credit card, why do they
Um,
decide to charge 28% interest? Which I mean is just, it's crazy. Um,
yeah, and you
but
would think that
I
that
don't
would be
know.
a deterrent, right? That would be a
Yeah.
deterrent. I'm not paying 8%. No, I don't have insight on who charges what. It is always generally risk based. So if you see when you go onto a website that offers 5 different kinds of credit cards under the same company, like American Express, if you have credit score of 750 and above, you'll get a much lower interest rate because you're less of a financial risk to American
Hmm.
Express, right? So many of them will offer tiered rate structure, tiered pricing structure. Obviously, if they're engaged in anything that's unfair or deceptive or abusive, like extensive late fees or tiering of late fees, the CFPB will look at that and examine that. So the credit card companies will get their hands slapped, but or fined or anything like that. But at the end of the day, um, if their rate is 28%, I don't know per se what credit card companies use as a ceiling. The Credit Card Act does have a lot of guidance around that. On you just won't be competitive either. So why would you offer
Hmm.
35% unless you're a subprime type lender and you're lending to high risk, which I personally I wouldn't even work with a company like that because that to me is predatory. It's
Yeah, and
kind of like kick, right?
I may be misspeaking, right? Because I honestly don't even know what my credit card charges, right? Because I pay it off and I don't pay interest. I mean, maybe I should know, but I don't. So maybe I am misspeaking. I just know that, if you think about it and you think about mortgages in 2021 and 2020 during the pandemic, and get a 30-year mortgage on your home for under 3%, but then you apply for a credit card and they want you to pay 15 to 20. It's just, it
Well,
adds up. It's just,
it's a difference between unsecured and secured debt, right?
okay. That's a good point.
They're taking a big risk. The credit card companies are taking a big risk because they're extending essentially credit to you in that dollar amount with no collateral.
That's a good point, right? The bank can take your house if you don't pay your mortgage, right?
Yeah, right.
Okay, yeah, yeah, maybe
Mm-hmm.
should have realized that. Okay,
Or
I
your
want to ask. Yeah,
mm-hmm.
yeah,
Mm-hmm.
yeah. I don't know. Maybe we can get into that a bit because I know that you started a bank. You worked for Citibank. Can you talk about how? And this kind of leads into my other question because you worked in the financial sector at one of the biggest banks in the country through the financial crisis. So maybe that was kind of my question. And if you could speak to that, was there any sense that things were going awry before that financial crisis hit you in the country, especially working for the bank, or did it kind of come out of nowhere? And then I don't understand it. I know that there's more regulation post financial crisis, but maybe at a very high level or in layman's terms, you could speak to what changed pre regulatorily, going pre financial crisis to post financial crisis.
Yeah, I think that's a whole hour conversation in
Okay.
itself, but always signs. And whether or not those signs were ignored or lack of effective controls. So if you don't have check the checker, I'm just simplifying things. If you
Hmm.
don't have a set of segregation of duties or dual control, um, things will slip and things will, then people are able to manipulate the movement of funds, right? It's all about policies and procedures and establishing effective controls. It was the lack of controls that led to um, the debacles everywhere. And that's a general overarching statement. I know that like I said, we can certainly get into the weeds later some other time,
Yeah.
as to what those lack of controls could have been. But I would say that's the overarching reason is there was no one checking the checker.
And you were working for City at the time, right? So you had inklings of like, hey, things don't feel right generally in the banking sector and some of the practices that were going on. And then, it gets so bad that everything falls off a cliff. Is that kind of the sense you had, being so close to things being in that industry?
Not in the area that was under my purview. So,
Hmm.
I didn't have anything under my division that was cause for alarm. This happened
Okay.
in some of the other bigger divisions, not just with Citi, but with many, many institutions, right? So it's usually held at a much higher level on the trading floor or, in the investment portfolio or things like that. But I would say for the most part, I mean, obviously it's trickled down, and you've seen a lot of regulation come off. I mean, the CFPB was what, 400 pages of regulation or something like that. It trickles down to make sure. So to give you an idea, when I bought my first house in the 90s, my disclosure at that time was at best 10 pages, at best, on my, mortgage responsibilities and disclosure. A couple years ago, I literally got a binder from Wells Fargo of disclosures, a 3-ring binder. Now, obviously, it's progressed even more to be electronic. And we used to sign a mortgage application that was maybe 3 or 4 pages. Now the mortgage applications and loan approval documentation are extremely extensive. I mean, it takes a good several hours to document everything and read everything. So that's what regulation has done, is
Mm.
improved. But again, it's up to you, Connor, to read it, right?
Yeah.
Um,
Yeah. I mean, I bought a house in later in 2021. So interest rates were still low, but to be honest, I may have read it at the time, but have I retained the information
mhm.
around the mortgage disclosures? I don't know if can say I have. So I don't know.
Yeah, yeah.
But so maybe kind of the same vein, if you look at the housing market now, obviously prices are higher than they ever been. Mortgage rates are higher than they've been in a long, long time. Just from your banking perspective, from your career perspective, what are your thoughts on the housing market, and are there any concerns about Americans being unable to afford these mortgages that have essentially doubled since the pandemic due to prices remaining high and interest rates more than doubling? Do you have any thoughts on that?
Well, I'm not an economist, so I'm not going to predict at all or
Yeah.
or give an opinion about that. In terms of overall risk, I consider myself a very low risk borrower. And I manage my finances well. I pay off my credit cards. We do not overspend. I'm a very low risk borrower. But yet, I just moved into this house about 6 weeks ago, and it was it was the most mind-numbing and extensive set of requirements placed on me, um, to the day that I funded the loan. Like, okay, well, you've given us bank statements up until September 30th. Can you give us bank statements from October 1st to the 10th?
Mm.
And I'm like, what did you think? I was going to go out and spend $100,000 in the first 10 days, right?
Yeah.
So
Yeah.
uh, I think that the banks, and I appreciate what the bank is trying to do. I just, in my case, didn't feel like they balanced the risk very well. But plus, I have a high credit score, so but they had to check the box and make sure that they reviewed everything. They questioned every single transaction, and that was as a result of the financial crisis we had in the mortgage industry, right? So, do I think that there still may be opportunity for default? Yes, because people still lose their jobs and things happen,
Mm.
and
Hmm.
health, medical issues happen. If someone gets, unfortunately, a medical issue that doesn't allow them to work anymore, that disability doesn't cover it. There are life events that could prevent someone from making a mortgage payment that they end up defaulting. But do I think that mortgages will default as a lack of proper assessment of ability to pay? Not so much. Not as much as it was back in the past. But
Yeah.
defaults are still going to happen.
Yeah. I think you bring up a great point though about the scrutiny and the controls that are in place now. I mean, post financial crisis. And
Mhm.
I've heard about it on the news about what it was like to get a mortgage in 2006, but I mean, I was still in high school at that point, so I wasn't buying homes at that point. But I'm sure, it's
Mhm.
night and day going from
But
then
night and day.
to now.
Yeah.
Yeah.
Mhm.
Okay.
Like I
Well,
said,
yeah. I
I've
mean,
been I've been buying real estate since 1990, and it's 100% difference, if not
mhm.
more.
Okay. No, yeah. I think you just bring an interesting perspective on that. And I want to pivot again too, because, we've been talking just general banking questions and kind of things that are of interest to me. So I appreciate you entertaining those and answering those. But I want to pivot back to your journey as an entrepreneur. And I recall earlier in the conversation, you talked about even at Citibank as you moved up and explored different areas within that company that opportunities kind of found you. And it seemed like that is the case as well when you decided to go out on your own. You said, hey, I have these CEOs that can be my first customers. Can
Mhm.
you just speak briefly to why you think that occurred? Or is there anything you did specifically for opportunities to find you? Because is that a common thing you think most people can take advantage of?
I remained involved even when I served in the C-suite at a financial institution. I was member of a California Bankers Association regulatory committee. So a lot of my peer group were in that committee throughout the state. I always had took every opportunity I can to present at conferences, at banking compliance conferences, even as an employee. So my name was out there, especially in California. My name was already out there. People knew of me. So it was easy on the onset to call my friends, if you will, in the space saying, now I do this on the side. If you need any help, let me know. So that was easy. As now that we've grown nationally, it has been through the result of, again, attending more conferences, opportunities like this, where you saw, well, we spent the last 45, 50 minutes talking about things that I'm passionate about, regulation and financial services. And then speaking at conferences and educating other bankers or educating consumers. I do that at least once a month. So I get my name and my expertise out there. I participate in independent community bankers, American bankers, all of those kinds of things, as well as one of the things that's worked well for me is aligning myself with partners that also support the same space. So if you're a technology vendor that creates technology for banks and credit unions, so your client base is the same as my client base, but you don't offer what I do and I don't offer what you do, but yet we both recognize that what we offer is valuable. So
Mm.
I've had the privilege and luxury of being able to be partnered with some of the really great companies in the community bank credit union space that support those customers that we share. So if you're working for the tech company and that person that you're trying to talk to, the compliance officer says, well, I really would love your technology, but right now I got to get through this compliance thing and I don't know how I'm going to do it. They say, well, we have a partner, it's RADD. And we have plenty of case studies now where we post them, our case studies as well, through social media platforms of how we've helped. We never publish who we've worked with because we keep that confidential, but we say that a bank approached us for this, they were cited for this, we fixed this. So people can see the depth of what we do. And then of course we offer references. So I just got off the phone before our call today of a client that's looking to offer a new product line that's a vertical that's high risk. So they wanted the names of my clients that I've worked with. I'll call my clients and I'll say, hey, can I use your name as a reference? And so the references have helped build, and then they pass the name along. And that's how we've grown organically a lot that way.
Yeah. So it sounds like you employed certain strategies to grow your career and now your business, right? And what I kind of gleaned from that is to network, to put yourself out
No.
there, to serve others, create goodwill and a value and a valuable brand, and that will allow
But do good
opportunities.
work, right?
Yeah, and
So
good
do
work.
good
Yeah.
work. I wouldn't have credibility if I didn't hire the right people that were
Hmm.
certified, that were experts in their field, right? So you have to produce the work. You can, lip service is great, but you have to produce quality work that passes criticism, right? Because at the end of the day, our work will be looked at by a regulator. That's the nature of what we do.
Yeah, that's a good point as well. And I forget where I heard this, but you're basically, when you're an entrepreneur or running a business, you're selling on both sides. You're selling your product and services, but you're also selling the other acquisition channel is who you're hiring. And as you mentioned, if you hire the right people, they make it easier to produce good work, provide valuable services, so you acquire customers. It's kind of two sides of the same coin, right? Maybe can you speak to your strategy around attracting and retaining top talent?
So strategy, as well as I would say that is our biggest area of constant opportunity, is finding. We do have, obviously, RAD has and it's on our website, our mission and our vision and our core values. So when we're hiring uh, professionals, obviously experience in what we do is key. It's not easy for someone out of college to understand risk in a financial institution. It takes someone that has been in it, been in the trenches, gotten their feet wet, gotten their hands wet, whatever. So most of the people that I hire have come from working in the bank or credit union or financial services field, right? So they
Hmm.
know they know what it takes to deliver this, and that makes them a better consultant because they see it from the banker's perspective. Um,
Yeah.
so that's a critical element. Certifications in our industry is critical. I will, every one of my internal audit clients requests the resume of everyone that's going to be auditing them because they want to make sure those people are qualified to perform the assessment. So certifications. Then we follow up with how do they marry to our core values? How will they help me execute my mission and my vision? And then, of course, the typical stuff, your background and all of that. And 99% of the time or 90% of the time it's a fit, and sometimes it's not. So as a founder or as a leader of your company, knowing when to make that decision that it's not a good fit is even harder than the acquisition, portion of it, right? When
Hmm.
you want to give them every opportunity to do better, you want to give them the tools, you want to give them training, but if they don't have the capacity or they don't have the aptitude, the most difficult decision as an owner or founder is to make that decision to cut ties. That's probably the hardest part. But at the end of the
Yeah.
day, I have to look out for what's best for my client and make sure that, they get what I have promised I would deliver. So that's the harder part is letting go of someone that, and I had a boss tell me once, you never have to let go. They end up letting themselves go by lack of performance or not stepping up. But you still, at
Hmm.
the end of the day, feel bad because you had to let somebody go,
Yeah.
right?
Yeah. You have to have that conversation, right?
Hmm.
Okay, a couple more kind of founder based questions to close us out here. And I'm curious, as you made that transition away from the corporate world, and I understand you may have had, a few potential first customers lined up, but, as you, let's say, officially resigned from the corporate world and you were out on your own, what was your biggest fear? And then how did you kind of overcome that fear or continue to just work at it to get to where you did today? What was the biggest key to that success?
The biggest fear I had was continuing to. So it's funny, my career then took a full circle back to sales, right?
Hmm.
So the biggest, I never considered myself, I mean, I did well when I was in sales in my early part of my career, but I was also 24 and very ambitious. Um, but what never died is ambition. So my biggest fear was acquisition of customers. I knew that I was a good compliance officer. So in my eyes, as long as I was doing what I knew how to do, that I would deliver an exceptional product. So I wasn't worried about the product output. I was worried about how to get the customers. Um, and then identifying people as I continued to grow and acquire to find the right people that still, as I said earlier, carried my mission and my vision and my values, in what they did. That is still always the fear is now that we've grown, now that I have a heavier payroll, is acquiring new customers so that I can continue to achieve the goals that I've set for the company growth. And so it is, what drives me is two things. I want to be able to leave a legacy, my company to my family so they could take over. I want to, help financial institutions, and I want to take care of my employees. And to do that is to constantly become more profitable so they can get better bonuses or raises, because I've handpicked them because of their expertise and their commitment is to be able to give back to them. So, it's funny because when they tell you you're self employed, you get to set your own hours. What they don't tell you is those are 24 hours a day.
Hmm.
So I am available, good or bad. I'm available 24 hours a day. I will answer or send emails at the middle of the night. And I've even had my team call me out on it saying, stop emailing at midnight. I'm like, well, stop reading at midnight. I'm going to email at midnight, but you don't need to work. I don't want anybody. I 100% believe in, work-life balance. And when they shut off at the work for the day, whether it be 2 o'clock, 3 o'clock work, I don't care. My team is all over the country. I don't micromanage my team that way. But what the only thing that I manage my team with is never let the sun set on your customer. If you've made a commitment, that you're going to get back to the customer, get back to them. If you made a commitment that you're going to deliver a report on Friday, deliver the report. Those are my expectations, right?
I
But
like,
how you manage your time, if you want to wake up at 2 a.m. and work from 2 to 8 because you've got kids, I don't care. Um, but just because I choose to email when things are quiet, when I'm not getting bombarded by emails myself, when the phone isn't ringing, doesn't mean that you need to respond to me at that moment. And that was something that I didn't communicate effectively on the onset. And people were thinking that I was expecting responses immediately, and that wasn't the case. So I level set that. That doesn't happen, as we continue to grow. And so now we've developed a much better onboarding as a result of, you know, and really focus in on our values and the onboarding of employees. First, I would just onboard them because of their certifications and we, hit the ground running. But now we invest the time for people to understand our culture. So as an entrepreneur, you're always going to, one, always get feedback. So we hold a call every week with the team. What worked well, what didn't work well, and a shout out to somebody on the team that helped you, that went above and beyond. That helps us to continue to refine our process, and we also send out surveys to our customers too, but to help us to continue to refine our process. So I would say never stop articulating, never stop evolving, never stop developing, because there's always something that can be done better, faster, quicker, cheaper, more efficient. There's always a better solution out there. So just keep your eyes and ears open. And I'm still ambitious, at
mhm.
doing this for 20 years, I'm still ambitious. So that's what drives me.
Yeah, that's great to hear. You touched on a lot of great points there. And this will be my last question, but just to close us out, and this is just very general. So maybe if you can kind of boil it down and maybe it connects to one of the points you just made, but for anybody that is considering starting a company or taking that plunge, what is the number one thing they should consider before going out on their own and starting a company, regardless of the field or industry it's in? Is there any top advice you can give to a potential entrepreneur out there?
I would say do your homework. There, and we started the conversation very much in the conversation of about passion versus need, right? And so you have this passion to develop this new technology because you're going to think it's going to save the world. Who else has done it and tried it and failed? Do your homework, know what your market is. And I would tell that even to my financial institutions that are looking to expand in a different vertical. Have you done your market research, right? What is the capacity out there? What is, the need for have a business plan. Do not go into this just based on passion. Be
Mm-hmm.
well educated, know we're looking, actually, we did a strategy session 2 days ago, and we were looking at what other vertical we want to expand in. And I said, well, let's consider this vertical or this vertical, but not until 2025. Let me have 2024 to attend those conferences. Let me see what people are saying, what they feel are their pain points, and see if what I have to offer can fix it. And if it doesn't, then we move on to looking for another vertical, right? So, but take the time to do your research and know that there is a need.
Yeah, that's great advice. And so I just want to say thank you for taking the time. I know you're very busy running your company and a lot of engagements, taking an hour to speak with me. I thoroughly enjoyed it, but I'll close here by giving you the floor. Any last thoughts? Where can people find you? Yeah, floor is yours.
Well, thank you so much. First of all, thank you for this opportunity. It was a lot of fun talking to you, and I'm very passionate about what I do. So I would tell people that if you have the entrepreneurial spirit, don't let it die. Explore it. I'm happy to mentor anyone that wants to talk about it, and have well, in Southern California, can't go
Yeah.
anywhere far, but meet me for a cup of coffee. My name and my email is on the website, as well as you can fill out our contact us page. I can send you my phone number or we can have a conversation. If you're interested in what we do, our website is, again, very detailed. We offer a variety of services that are out of the box, but also customizable. But we're a team of individuals that really care about our clients and that care about the well-being of the financial services industry. So if that resonates with you and want to be, join us in or solicit, having us help you, we would love the opportunity to speak with you. So, my email is simple. It's my first name, RADHIKA at RAD LLC, which is RADDLLC.com.
Awesome. Radhika. Yeah. And I'll put any information you want in the description, but yeah, I'll put your email in the description, your website. So that way people that watch the episode could just go down there and shoot you an email or check out your website. We can go from there. So again, thanks for the time, and yeah, best of luck in the future.
Thank you so much, Connor. You too.